right, so if you have your own business, remember, you never want to use your own finances to pay for things in your business because you're going to end up running out of money if you scale, and you're going to be limited to the amount of money that you can spend to invest back in your business. Remember, this is about investment. This is why banking and funding and finance and credit is very important to master in your business. And here, I'm going to walk you guys through a few sequences and just get an understanding of what banking looks like if you want to do this on your own. Number one, of course, you want to have great credit. There are ways to go around that, but it's always going to come down to credibility because the banks need to trust you. So we're going to talk to people about a banking sequence. A banking sequence. Our banking sequence is this is how you want to maximize the most money you can get from a bank. How do we know we can maximize it? Because they're going to stop you, right? We have hard inquiries. When you get a hard inquiry, it's a signal to the bank that you've applied. So they're communicating with each other, right? So what we do know about these hard inquiries is that when you apply, for example, like a bank of stature, like Bank of America, you're going to get an inquiry from Experian, Equifax, and TransUnion. However, not all banks are going to report to all three credit bureaus. So you might have some banks that may only give you one inquiry and maybe Experian, right? So you might get one here. Then you might get another bank that might give you an inquiry on Equifax. So it might give you one here. So this is how you want to apply. You want to look at the different banks because you don't want to have more than 2 to 3 inquiries because then they're going to deny you. More than 3. It's dangerous. So this is why Bank of America is one of those banks that they're signaling to everyone that you are applying. Another way is you can apply is through relationships. You have bank relationship managers. The thing about bank relationship managers, they work for that particular bank, so they're not going to give you the best game plan to scale overall. They're just going to tell you what you need, and they're not going to care about your credit. They're just more concerned of giving you that product and services and delivering that and sending you on your way. So another way you can get money from a bank is taking loans out from lenders. There are certain lenders, I call this like lines of credit. Also, personal loans and business loans you can take out from lenders. These are people who just are investors and give out money. Like small private investors and banks. I have a lot of those. They help me get a lot of loans for people who have not the best credit, but if they have really great cash income, you can get some good, decent money from those people. Their interest rates are high, so it's up to you if you want to leverage that. Relationship banking. All right, so when doing a sequence, there are a number of things you have to be worried about. Number one, some banks require you to have money in the account. You have to find out how long. Not all banks require you to have money in the account. Sometimes you might need to have money in the account for 30 days. Some accounts, 60 days. It depends on the bank, all right? So now you're looking at a few things. You're looking at how many inquiries you need to have. You're looking at the amount of money you can max at that bank. You're looking at when you should apply for that bank. And then you also have different loans. I hope this information helps you. If you need to learn more about sequences, I have 4 data points. Because these are data points, right? To help you maximize if you can get even more money out the bank.